Welcome back. Well, it's clearly turning out to be a choppy session because Nifty is once again back above the 9200 mark at levels of 9206, down by about 31 points. Bank Nifty is trading lower by 0.3%, but good recovery has been seen for the mid-cap index. You've got the BSE mid-cap index, which is just about trading negative, just down by about 0.1%. Couple of stocks which have done well. You've got MRPL, Bajaj, Finserv, NLC India, as well as Berger Paints, which are your top gainers on the mid-cap index. But let's get a better sense in the market and get our fundamental guest for the day. Mayuresh Joshi is joining us. Hi Mayuresh, good afternoon. Thanks for joining us on BTVi today. Mayuresh, how does the market look? Because we've seen FI selling coming about in the last three trading sessions in the cash segment. There are some jitters with regard to the geopolitical factors as well, and we are kicking off the earnings season tomorrow with Infosys numbers. What should one do from here?
Afternoon, Navneet. So yes, I think the markets are facing a glut of liquidity coming through, and again from the domestic and the foreign institutional investors pouring in money in the Indian equity markets. Yes, the last 3 days probably FIs might have just taken some money off the table, but one really needs to look at this in the context of how earnings will pan out. We are probably trading at higher valuations from a Sensex or a Nifty perspective, and the earnings are not coming through. So I think the markets will re-rate themselves only when earnings start coming through. Our own sense is that with credit growth expected to pick up by the second half and on a low base that we probably embarked upon from this financial year to the next, earnings will appear far more robust as utilization levels start picking up across industries with the government front-loading its capex program in the coming fiscal. My entire sense is that the earnings should show significant recovery by Q3, Q4 of this fiscal, and that should probably re-rate the markets. Till that point of time, my own sense is that the markets might just gyrate in a range, it might consolidate around the current levels. Because of any global headwinds, the market might probably correct, but that correction probably gives a very good opportunity to enter into qualitative stocks in an aggregated or a segregated manner, and probably just have a staggered way of putting it through over the next few weeks. So largely again, I think earnings season kicking off, not expecting a great deal from the earnings season this time around as well. Q4 largely the first few days were marred with remonetization exercise being completed, and largely again I think numbers or management commentaries for the fiscal year ahead is something that the markets would ideally look out for. So again, expecting a soft earnings quarter to come through, but again specific stocks can really do well in this season as well. So I think have a stock specific approach in these markets.
We'll talk about some of those stocks, Mayuresh, but before we do that, let's talk about the big one that's out tomorrow, Infosys. What are the expectations this time around? A buyback highly anticipated. The other big three have already gone ahead and done that. As also, just on IT earnings, as you talk about Infosys, margins likely to remain under pressure as the street is expecting the guidance figure for dollar revenue growth also to be revised lower to about 8 to 10% from the 10 to 12%, which is the industry standard. What are your views on all of this?
Now again, the IT sector, Dipanshu, has been marred with a lot of headwinds. You're probably expected to hear a lot more from the management in terms of how the demand environment is looking and shaping up, because Q4 is typically the time when a lot of client discretionary budgets are decided. Secondly, on the pricing front, how are the pricing environment panning out generally across sectors, whether that is BFSI, healthcare, life sciences, healthcare. I think these are going to be important attributes going forward. And as the business transformation is taking place across these companies towards the Internet of Things, automation, digitalization, I think the investments that are probably coming through in this part along with the client feedback is equally important. Coming specifically to numbers, my own sense is that the street has largely factored in a 7 to 9% constant currency guidance specifically for Infosys. Our own expectations is 1.5% quarter-on-quarter dollar revenue growth close to the 2,600 million mark. EBIT margins probably should sustain around 25%. But I think the commentary around all the areas that we probably discussed, along with the hit that these companies will take because of the cross-currency pressures, will shave off around 30 to 50 pips in terms of the margins. Secondly, I think in terms of how the guidance will be for the rest of the pack, I think it's going to be a very company-specific approach. HCL Tech, in our opinion, is expected to post the most robust numbers, but EBIT margins there would be constrained because of a partial wave salary hike that these guys will take for this quarter. And obviously, you're going to see some amount of impact coming through in terms of seasonality in terms of the acquisitions that they've done. Similarly for Tech Mahindra, Wipro, not expecting a great deal to probably come through. The guidance for TechM in terms of how their enterprise and telecom verticals are shaping up is going to be extremely critical. LCC, their acquisition is probably going to shave off a bit in terms of how the top line and EBIT performance will be. And Wipro probably can post a similar set in terms of their expected guidance given of around $1926 million, which is a 1.5% revenue growth in dollar terms. But largely, again, I think these stocks have been marred by a lot of headwinds, and those might very well continue at least in the first half of FY18. So largely, I think management commentaries, the guidance and any talk related to buyback for Infosys will probably shape up the future of the stock price. But again, I think the underperformance in terms of how the markets might move and how these stocks might perform can continue for at least a quarter or two.
Right. Well, clearly the guidance for FY18 will be a key trigger this time around, and also the stock of Infosys looks like it's corrected and it is trading in the positive territory now, though no significant move seen neither on the upside or the downside. Currently trading at levels of about 970 or thereabouts. But overall, Nifty IT has been weak in today's session. That index is trading lower by 0.7%. You've got Polaris Consulting. That stock has surged just about in the last 5 to 10 minutes. Currently, it's trading higher by 10.5%. In fact, that is a day's high at levels of about 196. Let's quickly get a technical check on Polaris. Mohit, how is this one looking?
Well, we've seen a really good move on charts today on heavy volumes. However, I think the upside is a little capped. I think around levels of 205 there will be pretty strong supply that will come in, so maybe not the best fresh entry point because we've seen a move from levels of 175 to 196 already. For another incremental 5 to 10 rupees, I wouldn't want to go long here, so I want to avoid this stock for now.
Right, Mohit, just about 10 odd minutes to go. A lot of action in the broader market. So what are some of the stocks that are catching your eye?
Well, Jubilant Life is one that's looking good on the charts. Though it's cooled off from the day's high, it still looks good, got a very positive chart structure. We can see levels of 880 to 885 next year. It's a buy with a stop around levels of 835. Even Natco Pharma from the same space is looking good. Here we can see levels of 910 next, so it's a buy with a stop around levels of 865. And lastly, even Glenmark. This is looking good on the charts, kind of bottomed out around the 850 to 870 zones. This could head higher towards levels of 920 next. So this is a buy with a stop around levels of 880. From the other space, there's a stock called ITI that's actually looking good on the charts. Seen a nice up move in trade. This can head higher towards levels of 80 next. So it's a buy with a stop around levels of 72.
Well, clearly the pharma space seems to be the only space which is doing well. You've got the Nifty Pharma Index, which is trading higher by 1%. In fact, your heavyweight like Sun Pharma has seen gains of nearly 2.5% coming in today's session. You've also got Piramal Enterprises. In fact, Spark is also up by 3%. Glenmark, Lupin, Dr. Reddy's and Aurobindo all are trading in the positive territory. Mayuresh, this is the other space where that headwind comes from the US market. There has been a lot of talks in terms of lowering the prices, also concerns related to US FDA or even the European regulator. How do you think the earnings could be for these pharma companies, because the valuations currently are pretty cheap?
They are nominated, but you can't paint the entire sector with the same brush. So largely, I think FDA concerns have marred the sector for the better part of the last fiscal. Having said that, what Trump might come through in terms of repealment of Obamacare and how much significance that will attribute to pricing pressures on the generic side of the business, I think those are the large unknowns that one really is looking at for the pharma space. To top that up, I think with the rupee appreciation that has happened, translational expenses, if it stays in this range, can very well continue even in Q1 of the next fiscal. Having said that, my own sense is that the pricing environment that we've probably witnessed, a lot of companies probably are already pricing their drugs, at least in the generic space, at a very competitive level, and that's the whole purpose of the exercise of creating these generic products. Secondly, I think a lot of these companies have a huge pipeline in terms of the ANDA approvals that they've already got. And again, I think the kind of approvals still needed to be sought is pretty large as well. So there is a huge and humongous scope in terms of market addressability, in terms of key launches in drugs that can be launched by a few of these companies. Having said that, probably I think the stock like Natco Pharma is looking relatively better in terms of the earnings profile. And again, Alchem Laboratories is something that I've been liking for a length of time within the mid-cap space as well. 73% of its business comes in from domestic formulations, largely insulated in terms of what might come through from US policies. 20% does come through from the US business, but that is again in niche drugs. Yes, there was an issue raised by the FDA, but I think that has a minimal impact in terms of EPS, and even the annually impact in terms of domestic pricing is hardly 1% on its EPS. So from the mid-cap universe, I think Natco and Alchem is something that can be looked at by long-term investors. And from the large-cap space, Lupin is something that I've liked for a period of time, with a huge pipeline in place, with generics expected to come through in terms of approvals over the next 12 months, with the Japanese market first mover advantage. My own sense is that earnings growth can be pretty strong over the next 2 years. So I think one really needs to have a specific approach in pharma space. But yes, I think pharma is one space that you cannot ignore, even if all these headwinds probably play against it in the short to medium term.
Mayuresh, can I push you for a price target on Lupin? What would we be looking at from a 1-year horizon?
So I can't disclose targets, but I think it's substantially higher from the current levels.
Fair point. Let's focus in on a couple of buzzing mid-caps as well. Pull up a Petronet LNG. It's cooled off from the highs of the day, but extremely bullish view coming in from Nomura on this one. They're saying that the target could be 510 rupees there. In fact, it's the highest amongst other brokerages that cover the counter. Let's get in Piyush to talk more about that. Piyush, what's making Nomura so bullish on a Petronet? They are saying that the Dahej operations can see significant upside going forward from here.
Absolutely. So what actually Nomura has done, the rating has been maintained at buy. The target price has been raised to 510, which actually provides good 15% plus upside as per the current market price. This price target is highest on the street, and they believe that it reflects their confidence on the long-term story of the counter. Now the stock run-up actually has been very strong, 72% up over 1 year, 127% up in 2 years, and versus the Sensex, it has been a rank outperformer. The reason actually they actually are saying that the Dahej terminal that actually can continue to surprise. The ramp-up has been very fast, and also they believe that because the global LNG price that actually continues to trade at lower price levels versus the last 5-year average, so that could provide a good upside to the volumes. Now they believe that because the Dahej capacity is actually mostly tied up to the long-term contracts, so the surprise actually could come on the marketing margins and also a bit on the volumes on the short-term side. In terms of the earnings outlook, they believe that the earnings actually they have grown by average 49% over the last 2 years, and actually should be able to continue at about 17 to 19% to the next 2 years, which actually indicates that the base effect is going to kick in. Also, they believe that 9% volume growth and 5% annual tariff increase, which means a combination of volume and price increase both, should be able to drive the earnings growth. Now also the volume growth actually should slow because the Dahej capacity has ramped up, has actually almost ramped up to its full capacity. So volume and price, they should be actually good factors to watch out for. Prime factor for confidence actually lies is that volume growth should be supported because the global price is at far lower levels versus what it was versus the last 5-year average. For example, the Asia LNG, spot LNG price was roughly around $18. Now it's trading around $6, and that's the prime reason why counters like Petronet LNG, they are outperforming.
Thanks, Piyush, for getting us all those details. So capacity expansion is the next trigger going ahead for Petronet LNG, where the earnings have also been nice in the past few quarters. Mayuresh, well, the Adani Group stocks have been reeling under pressure since yesterday after the Supreme Court order came about of disallowing Tata Power and Adani Power on compensatory tariff. What should one do? Because the entire Adani Group stocks have fallen. There is that fear that the other group companies like Adani Port, actually, which is doing well in terms of earnings, will have to, in a way, help Adani Power.
So again, I think highly leveraged, Navneet, at this point of time, and that does not give comfort in terms of how the cash flows for these companies will move. Specifically in the case of Adani Power, for instance, the debt equity is almost 8 times. So I think the leverage in terms of cash flow improvement just does not exist on the balance sheet. And again, the deterrent Supreme Court order that has come through in terms of compensatory tariffs not being allowed, I think that clearly is a dampener for the company in terms of how the earnings were expected to grow, subject to if the order was in their favor. But largely, again, I think would look out for stocks where the earnings profile is extremely strong and where leverage is not significant on their balance sheet, which will fuel and aid earnings growth. So Adani Group at this point of time, largely I think is an avoid for me at this point of time. Adani Ports has moved up significantly as well. So I think the valuations are at this point of time looking very, very fair.
Right. Mayuresh, let's talk about power and specifically power distribution companies. I was looking at the stock of transformers and rectifiers at morning. It opened quite strong, in fact, with gains of about 3%. I remember you've spoken about this space, especially this stock in the past as well. UP government pushing ahead with the Power for All agenda, replace all faulty transformers in urban areas within 24 hours, in rural areas within 48 hours. Could that be a big opportunity for this space? As also staying with the power space, you've seen a lot of traction come in for the likes of a REC recently. Any views on these two names?
So transformers is a space that I have liked in the past and I continue to like it. The capacity addition that had happened significantly from fiscal year 10 to 14, 15, I think you're probably seeing that getting dissipated because I think utilization levels have gone up. The unorganized players will slowly start disappearing from the market, and that gives a greater opportunity and chance for the listed players like a transformer, like a Voltime, like a Bharat Bijli, for instance. Largely again, I think the order flows have been quite strong. They've been able to improve their utilization levels. Because of that, I think the margin improvement has been seen on the balance sheet. Cash flows have seen significant improvement. The working capital requirements have gone down significantly, and because of the debt equity requirements also going down because of the working capital constraints that they were facing in the past, I think new order flows coming through with good margins is going to entail robust cash flows. So yes, I remain positive on this space. As far as REC PFC is concerned, I think the momentum, in my opinion, that these stocks have exhibited can very well continue. The restructured book for REC has gone down significantly at 19,500 crores at the end of Q3. The loan book overall for PFC has gone down, and then the Uday scheme implementation will largely take sheen away in terms of the incremental advances that they've got and the yield on advances thereof, and put pressure on NIMs. But largely again, I think as they strengthen and as the SEBs strengthen their balance sheet, my own sense is that the loan growth should resume over the next few quarters, and they've got a very, very strong balance sheet dynamics. Spreads for REC in excess of 3.5%, for PFC in excess of 3%, NIMs for REC close to 4.5%, 4.6% annualized for the next 2 years is what the expectation is for PFC, close to that 4.5%, 4.6% mark as well, and good dividend yield paying stocks. So I think at least 4.5% is what REC pays, around 4.7% what PFC pays. With the improvement in prices, the price to book has probably moved to around 1.2 times for REC, 1.1 times for PFC. But again, I think as the earnings start coming through in the next few quarters, my own sense is that the balance sheet dynamics will appear even more stronger from the current levels. So I think it's a clear hold for investors holding these stocks at lower levels.
Well, you've got Bosch actually, which is doing pretty well right now. In fact, if you could just pull up the intraday chart, Bosch is trading higher by 3.5%, and it's just seen some buying momentum coming in the last few minutes. In fact, it's your top gainer on Nifty. And you've got Tata Steel, which is currently trading at day's low. Tata Steel has seen cuts of nearly 2%. In fact, I was checking the futures data. Some fresh short positions have been created on Tata Steel, which has seen cuts of nearly 2% coming about.
Right, just about a minute to go before we wind down today's trading action. It's been an extremely choppy session of trade for you. We are significantly off the lows of the day, traded in about an 80-point range, holding on to 9,200 at close. That's important to watch out for, but kind of giving away most of the gains that we made up in trade yesterday. So clearly, global cues continue to weigh on market action. About 0.4% of a cut coming in on the Nifty, similar as the move that you've seen on the Bank Nifty as well. Select private banking names have held out. So Yes Bank, IndusInd Bank registering gains of about 1%, but pretty much all other banks on the back foot. Bosch, as Navneet was just mentioning, the top gainer on the street at close, 3.5% of an up move coming in over there. Bharti Infratel has done well, up about 3.5%. Sun Pharma seeing gains of about 2.2%. Eicher Motors on back of some brokerage action, up by about almost 1.5% as well. BPCL and HPCL also seeing some gains in today's trading session. Hero Moto up about 1% at close. You had Dr. Reddy's that did well, as also the likes of a Bharti Airtel. But clearly momentum was with the declining stocks in trade today. Metals correcting sharply. So you had Tata Steel down by about 2%, as also Hindalco. Technology pack also on the back foot. Wipro seeing cuts of about almost 2%. Infi was more or less in positive territory for most of the trading day today, closing the day out absolutely flat. GAIL, Z Entertainment, Adani Ports from the Adani Group losing out in a big manner. Tech Mahindra was weak, as also Maruti Suzuki. Grasim Industries on the back of the shareholder nod for Grasim AB Nuvo was in focus, but losing by about 1.5% at close. Tata Motors, NTPC, RIL and ICICI Bank are some of the other losers that you've had on the street today. On the broader market front also, Navneet, seems to be a similar picture going.
That's right, Deep. But if you look at the market breadth, which was weak actually since the morning session, recovered intraday. So finally, the market breadth on National Stock Exchange was about 1:2, which was in favor of the declines. And talking about the broader markets, you had the BSE Midcap Index, which saw cuts of nearly 0.2% coming about today. But once again, there was a lot of stock-specific action which we witnessed in the broader market. So you had Aditya Birla Fashion, pardon me. That stock was up about 5%. That was your top gainer there. MRPL was pretty strong throughout the day. That stock held out the gains and ended the day with gains of nearly 4.5%. NLC India, Bajaj Finserv were a couple of other gainers. Even Petronet LNG, as Piyush was mentioning, Nomura has increased the target price there. Berger Paints did well. A couple of your mid-cap pharma companies were up and about. So you had the likes of Glenmark Pharma, which was up about 2%. Max Financial, which has been gaining in the past few sessions, once again saw gains of nearly 1.2%. On the flip side, well, Adani Group stocks were down for the second straight session. So the top loser was Adani Power, down about 8%. Adani Enterprises saw cuts of nearly 5% coming about today. And Indian Bank, which has been witnessing fresh short positions in the future side for the last 3 trading sessions, once again was down by about closer to 4%. Torrent Power, Reliance Power, MRF were a couple of stocks which were weak today. But as I mentioned, there was stock-specific action which was witnessed. You had ADF Foods. That stock was up nearly 14%. Canfin Homes, Alembic, Bombay Dyeing, AstraZeneca, a couple of these stocks held out and saw a good amount of gains coming about. In fact, Uptown was locked in upper circuit with gains of nearly 20% coming about. Goa Carbon reacting to its quarterly numbers. That stock was up about closer to 15 or 16%. It ended the day with gains of nearly 13% coming about. And Prime Focus was also one counter which saw some kind of buying momentum. And on the losing side, well, the stocks which have been gaining a lot in the past few trading sessions saw some kind of profit booking coming about today. You had Delta Corp, which was down about 4 to 5%, but from the Nifty Realty space, you had India Bulls Real Estate, which did well. That stock saw gains of nearly 5 to 7%. And as we've been mentioning that we've seen selling coming about from the FIs in the last 3 trading sessions today. In fact, the sell-off came on big amount of volumes. Overall turnover was sub 6.5 lakh crore, which is above the average mark for the turnover, which we record every day. Let's see how the FIs numbers pan out today.
Right, so that's the market print for you. Mohit, we've reversed most of the gains that we made yesterday, but held on to 9200 for now on the Nifty. What are you watching out for as far as trade goes? Tomorrow it will be the weekly Bank Nifty expiry as well, and a truncated week going into the extended weekend.
Well, the Nifty is range bound for the last week or so. We're between the ranges of 9270, 9275 on the upside and 9150 on the downside. As long as 9150 is held, you can continue to have this mildly long bias and trade on the long side, especially in a stock-specific action, stocks that are breaking out, making new highs. I think this trend will continue on them. But if 9150 is taken out, then there's a good chance we head lower towards 9000 zones, which is the previous support area. So we have to wait and see if we can hold on to the 9150 zones or not.
All right, those were some technical calls on Nifty as well as Bank Nifty. But as we were just mentioning about the markets, well, geopolitical factors have been weighing in on the markets globally. The next trigger will be the earnings season, which kicks off tomorrow with the numbers of Infosys, where markets will actually take direction now from the earnings going ahead, Deep.
Right, Mayuresh, just before we let you go, one pack that's been in focus of late, the entire banking space. Within that, certain PSU banks, especially mid-cap ones, have done well. But let me just throw a few mid-cap bank names to you. RBL Bank, South Indian Bank, as well as Karnataka Bank. A lot of traction seen over there, a lot of interest seen over there. Anything that interests you over here, especially in these names?
So RBL is something that I've liked for a length of time, but again, valuations probably at this point of time with the sharp move that we've seen seem to be on the higher side. But kind of advances in deposit growth that RBL has exhibited over the past few years, the traction can very well continue. Asset quality pressures probably not there as far as the other banks are concerned, which seem on RBL's balance sheet, at least at this point of time. Similarly, I think Federal Bank is one bank that I'd liked for a length of time. Even that has shown significant movement. And again, expectations is that the earnings momentum should continue. So I think these banks should perform well going forward as well. And again, I think if I have to pick and choose, I think I'll stick around with the larger private sector banks and the banks that we've discussed right now. Within the public space, the larger banks like SBI is something that I've liked in the past. I continue liking that.
Fair point, Mayuresh. Thank you for your market views. As always, that's the view coming in from Mayuresh Joshi of Angel Broking at 9200 for the Nifty at close. Reversing most of the gains we saw yesterday. Let's see what the trading session has in store for us tomorrow ahead of the extended weekend. But from now, for Navneet and me, it's a goodbye on this leg of the trading day. Up next, Rising Stars, Rashi Sanan Narang. He's the founder and CEO at Heads Up for Tails will be with us.